Hey, what's up guys? CryptoVatsik here with another TA video for you today. Nothing of what you're about to see is considered financial advice, and they're just my opinions. If you enjoy this content, I'd really appreciate it if you gave this video a like, and don't forget to subscribe. Let's go. Okay, today's just going to be a quick update video on Bitcoin, and we're currently on the weekly chart. I shared this chart back here in mid-February on my Twitter, so you may have seen it already. But essentially the idea was when we were trading back here, I wanted to see a retest of this 20K level. And so my theory was that any dips towards green were a buy, on account that I thought the initial sweep of this prior high we had in August would be a rejection. But we had multiple market structure breaks at the time of price action up here that led me to believe there was significant support down at that structure. So we did in fact dip down just below 20K very briefly, this weekly candle wicking all the way back up, and then of course expansion thereafter. I still think we're headed to that 33K level, but in the meantime it's going to be pretty critical to evaluate what might happen first on the lower time frame before we end up achieving 33K. Okay, so I just flipped to another chart and we're on the daily now, and there's essentially a couple different scenarios that I'm currently looking for. And as a precursor, both scenarios are based on the fact that we lose the current range that we're trading in up here. But I am leaning towards the bearish case that we will dip further from where we're at. And so the first level is that 25K psychological level first off, which was our key SR level that we've now flipped from these prior highs from resistance into support. So I think the first scenario that a lot of people are watching is clearly a retest of that level first. And it would make sense from a technical standpoint. I'm just not certain if it's going to be that simple though. I still think it would be perfectly healthy if we did drop down closer to the 23K level, which lives right in this fair value gap that we've got here from this candle here that we had on Monday, March 13th. And so given the explosiveness of this move, in my opinion, it would still be perfectly healthy to come down, fill in some of this gap, retest this resistance zone that we had at 23.5, 23.7 call it. Also a breakdown origin from this level here. So there's significance in this zone for sure, aside from that fair value gap that we've got as well. And one other thing too would be, it would be right on that 618 Fibonacci level. If we take the fibs from the low to the high or assumed high, and you'll notice there's our 618. And then just an added minor piece of confluence would be this trend that we had here as well. And it's almost like an equilibrium of sorts, of some sort of channel within this range, but it does show signs of respect, trading it as a trend back here until it was lost. We broke way below it, and then it was reclaimed on this consolidation here, then acted as support for 2 more times until we had this major fake out, and then now what is assumed a reclaim of that trend. So a couple different high time frame scenarios. I think a lot of traders are expecting this, and on account that we lose that level, they'll get bearish, people start shorting, we start to enter this fair value gap, and at that point people are expecting this low to be swept, when in fact we potentially reverse from that level, surprising the market as Bitcoin usually does. Okay, so we just dropped down to the 4-hour here. This is another chart I shared on my Twitter recently. So of course we've got our horizontal range from our local high up here. And I basically said that I wanted to see this green order block hold as support. So when we started dipping down, we got this major wick to the downside below it. Was able to close within the order block, but then we had a candle close outside underneath it after there, invalidating it. So at that point, I didn't really care too much that we pushed up with what looked to be like a reclaim of that equilibrium. And then of course, dumped back down to our range low with our Monday low now. And it said basically on a lower time frame, my invalidation was right here, sitting at about 26.5, what is essentially just that range low. So I mean, you know, there's a couple different scenarios. The third scenario to the 2 prior ones I showed you would be basically that this range in fact holds. We reclaim that EQ. We start putting pressure again on the range high for an ultimate breakout. So, you know, essentially on a low time frame, if this Monday low holds, then I have no problem with that and I have no problem trading it. I know we have wicked into red here, but essentially we had a high demand buyback and still held this SR level here from that prior high back here on the 14th. So essentially what is that range low, this zone in here on a low time frame, if it holds and we continue to consolidate, that's fine. But like I said, I am anticipating a sweep of 25K. It's a breakout origin that we had back here on the H4 timeframe. It's that high timeframe SR level from the prior highs of resistance that we had, okay, from back here and over here. So it makes a lot of sense for me to at the least test that 25K level. So if we chop around a bit more and show some weakness near the lower band of the range, break below red, there's your trigger to go short, and then possibly at that point come down, have a sweep of that 25K level with a swift reclaim, then it's game back on looking for longs to push higher. But like I said, what I'm really anticipating is a dump below that 25K level to about 23.5. I think it makes a lot of sense to me right now. It would be perfectly healthy in my opinion, and it would also provide a pretty good opportunity to short on a loss of the range low, this key SR, and Monday's low. For a bearish back test on the underside of that level, there's your short, stop above the prior high, and then to each their own, either targeting 25 or holding some all the way down to 23.5, depending on what price does, and depending on the action of price as you continuously evaluate it each day. And what I mean by that basically is, say we lose that level, you go short, and then you just start to see price continue to dump through that 25K level, then I would just hold it, and I would hold it, and then you get an underside, another bearish underside retest. Once you've lost it, I'd hold that short down to 23.5, and then I'd be looking for that breaker structure, market structure break, reclaim to either cut the trade or transition to long. Whereas the vice versa, if we get that deviation, reclaim, MSB down here, then it's time to cut the trade sooner than you anticipated. And this would all likely be on the H4 time frame for myself at least. Yeah, and so I had marked out some trade criteria when I shared this chart originally on my Twitter. I had said we have bear divs here from these higher highs. We got our dump, possibly due to the FOMC, but either way, I think the dump had played out. I wanted to see a retest of that bullish order block when we were trading up here somewhere. We did get the retest, but in fact, we got a failure. And that's why I had also listed here that I wanted the range EQ to hold. And that was pretty critical. So when we got multiple candle closes on the 4 hour, then it just led me to believe the EQ was lost. We briefly chopped around above it again at that point, but price action just looking very uncertain at that point. I would have much preferred a strong maintenance of that EQ versus this major deviation below. So now that it's lost, I am leaning towards the downside. I don't want to get bearish at support, but I have my invalidation here. I also saw this diamond formation that we had here. I think lots of people were drawing something like this, where we had a diamond formation. So now then you could just say we lost that. Now we're getting a bearish underside retest of that upper diamond trend. What is essentially just a downtrend. You can just take away the rest of the diamond and we're just following a downtrend still. Anyways, that's pretty much my thoughts for now. I think things still look good. I got 33K on my eyes. I got 30K marked out here, but I'm actually looking at 33. It reminds me a lot of the prior 6K shelf that we had back here in 2018. So just that major long-term level that we established support at. We were breaking down lower high after lower high, but maintained the level until we got our capitulation. And then it took some time to accumulate and trend reverse and actually consolidate right underneath that 6K level until we punched past it with confidence. So in my opinion, I don't see too much different with now the 33K level being equivalent to that 6K level just with the current chart. We had an area that was established as support, and yes, it looks different, but it's going to look different every single time. It doesn't repeat exactly, but it often rhymes. And from a technical standpoint, we had that major shelf built up over time until we had our capitulation event, and then what looks to be our accumulation. And then I want to see that consolidation underneath resistance for a punch up. And to be quite frank with you, that honestly would be my confirmation that the bear market is definitely over. I'd feel much more comfortable at that point. I know what you're thinking. It would be too late at that point to be buying up there. At least in my opinion, it would be too late. That's why I was comfortable taking on risk here, taking risk here, and taking risk here, and then taking more risk on dips on the way up. And so if you're looking at this and you're mostly sidelined, that's fine. I mean, we're going to get dips. I still think we're coming down to test some key levels. But again, I'm looking for that tight consolidation underneath resistance. After we, get some sort of correction, I'd like that push up to 33K. I don't think we break it on the first attempt. I think we see more of a consolidation under resistance for an eventual flip of that level. But essentially anything underneath that level, I still think could come back down and test the low again. I would just be much more comfortable on a clean flip of that SR. And for me, that would be my confirmation, so to speak. We had signs down here on the multi-month bearish trend breaks, on those market structure breaks, and clearly what is a bullish trend. So I'm just really hoping to see this not turn out to be a massive bear market rally that ends up coming down to the lows again. So for that to happen, I want to see us continue this trend, continue the strength. Dips are okay, they're healthy, but again, looking for that consolidation under resistance before we push higher. Anyways, guys, thank you so much for joining. That's it for today's video. I hope you liked this video. If you did enjoy it, please give it a like and don't forget to subscribe to the channel. As always, you can follow me on Twitter. We'll catch you next time.